this decay channel idea, do we have time today to quickly get into that? I don't know if there's time, but you can give maybe like a really quick update for anyone that hasn't seen your oscillator, because that is using less data points, but it's showing a pretty clear pattern. And it's really interesting. It's going to be really interesting to see if this decay pattern, this kind of like exponential decay pattern, continues, because this pattern has been extremely accurate. It's not a lot of data points, but very, like, as precise as you can be based on how many data points there are. And this oscillator between 0 and 100 has been quite interesting. So I don't know if we have time to get into that today.
I sent you the two charts, Sina. If you want to pull them up really quick, I can be super brief on this. I do think it would be valuable, because I think a lot of, at least my followers or people who have seen my charts probably have seen them a lot by now, and maybe could use a very brief, explanation of the oscillator itself. So I don't know if you want to. You can either do the zoomed out or the zoomed in. Maybe both.
Okay, I have it up. Just give me 1 second.
Sounds good. Yeah, so I'll just
do one.
So this is based on another channel. So one of the themes here is channels, right? The upper bound of this channel is based on fitting the 4 highest points of the Bitcoin price data in terms of its deviation from the power law support. So that's kind of a mouthful.
What do you mean? Yeah, what do you mean by deviation?
Yeah,
we should try. It's super hard, but we should try to.
I don't have a So
distance, or I guess what's the you go
deviation
ahead.
Or distance. So just imagine. So here on this chart, we're kind of hiding. There we go. That's a better view. So 0% here is the lower bound of this channel. So if you imagine, if you're thinking back to Plan C's channel, it's a similar looking channel, but the bottom bound is defined as this 0% value here, and that's based on the power law.
0% would be equivalent. 0% is equivalent to the blue line on my chart, roughly speaking.
I think you used 1%. I'm still using 5% here, but it's very, it's exactly same idea. So that's the power law is very well established, and that's what I think most of us analysts in the circle are probably. I think I can speak for all of us at this point. We're most confident in that trend, just mathematically. So all the data that launches above to higher percentiles on this chart are deviations or distance away from that support line towards the top. So the 100% line here is the fit line from 4 data points, and those are exactly 4 data points, which is the weakness of this model. But it's the 4 points that have the highest deviation, one for each cycle, right? The one in 2011. 2013, 2017, 2021. There's a single point that deviates the furthest from that power line each cycle. And this fits those as an exponential decay model. And then this linearizes everything and normalizes it so that you can see the fluctuations between those bounds. That's all this is. We could do another session explaining that a little bit better, but this has been like you said, Plan C, it's been a scary precise at hitting those tops exactly near the 100% line. I think the furthest deviation from that is the 2013 one, which is like 95.5%, I think, the one in 2013. And so today we're sitting at the price is roughly 62,000, right? 62,500. And the percentage is like 21.5% in this normalized oscillator. And so if we shot up vertically today, straight to 100%, I think we'd be around 180,000, 185,000. Of course, we're expecting that to happen next year, and the ceiling price at 100% will be much higher. And that's what we're trying to figure out what that's going to be exactly. This model says it's going to be somewhere between 200. If it's November, it'll probably be closer to 240,000. So that's kind of what this model is saying. Yeah.
Yeah, it'll be interesting to kind of look at the confluence between, as we develop the quantile regression channel, and then also, looking at Sina's volatility adjusted model of the power law. It'll be interesting to kind of see the confluence will begin to emerge over time as these models, get kind of hashed out. We'll see kind of, okay. And then also incorporate, of course, things like liquidity and trying to estimate, as best we can, the timing of these sorts of things. So,
I do want to quickly say there's strong similarity with the approach in terms of Sina's volatility adjusted power law index, just in the simple fact that it's it's another approach to take account for this actual exponential decay, this diminishing volatility, diminishing returns, whatever you want to call it. It's a different, it's a less data-rich approach to doing that, and just kind of trying to capture the upper bound with 4 data points. But it is, we have similar, there's a similar thread there, I would say, with Sina's work. So, which is amazing, by the way.
Awesome.